Alrighty, traders. This is Blake Morrow. You are listening to the Daily Roundup webinar, and Powell's been—he's been speaking. He's in a panel discussion and on a virtual IMF seminar, and he continues to be dovish, basically saying that he's going to support the economy, and we have to continue to support the economy. So he just, he stays on point with his dovish message, and that has allowed for the stock market to stay elevated. The dollar's sold off. We got the euro back above that 38% retracement. We're still challenging the underside of this trend line, but the dollar could be poised for another leg lower at this stage because once again, Powell's just not changing his messaging. He's staying the same. So we have the cable that's really underperforming as well. This squeeze higher that we're seeing in the euro sterling could be one of the catalysts that's driving the euro higher. And then, on top of that, you throw in a dovish FOMC chair, and you're going to get a squeeze in not only the euro, but the euro sterling and some of these other euro crosses. Even the euro Aussie is staying pretty well elevated despite the rally in equities. So you can see there's a lot of euro cross currents, but that should keep the euro pretty well supported. The pound, on the other hand, it is trading heavy. If you are long sterling, you got to be a little careful, because what if the dollar rallies back? That's entirely possible. So here's the dollar index. The dollar index is still staying in this flag pattern, if you will, in this channel that we have here. That came off a little bit. We could come back down towards 91.90 in the dollar index. That looks like possible based on what we're following here. We've seen a slip in the dollar against the Aussie. The Aussie's approaching channel resistance. This is going to be really important. I want to make sure I'm not short Aussies right now, but I'm considering it. But it's hard to do that when stocks are so well elevated. You know what I mean? We have the Kiwis actually recovered some too. We're back at the 38% retracement, so we're back at resistance. Dollar Canadian slipped off of these highs, making a lower high. Hasn't really pulled back too much, but at the same time, it's not gonna break out, not with stocks up here and not with the dollar as weak as it is. The US dollar Norwegian krona slipped back too a little bit, but still holding up pretty well. The dollar Mexican peso hit the 127% extension here at 20.07, which we were monitoring in the chat room. But again, will these levels hold with equities where they're at, and with Powell as dovish as they are, or as he is, excuse me, I have to expect that the dollar is going to continue to show some relative weakness right now. I mean, it just probably will. S&P, let's take a look at it. We're nearing 3,100, nearing those the all-time highs once again. I mean, I don't know what's going to rock the boat with equities. Not with Powell being dovish. The FOMC minutes didn't change at all yesterday, so they didn't suggest anything otherwise. The Nasdaq's holding up well. Dow is recovering, but still maybe flagging here. Russell 2000 bouncing back a little bit, still underperforming. And we've seen yen pairs, like the euro yen has bounced back. Matter of fact, if you guys want to sell euro yen, I think this is going to be the place. For those of you that were looking at it, keeping an eye on it, thinking about shorting it, these are the levels that you got to be paying attention to if that's the route you want to go. But again, with stocks as strong as they are, do you really want to do that? That's the question you're going to have to ask yourself, because people that were chasing the euro yen short today are the ones getting squeezed out of here, right? You saw the breakdown and we're like, okay, here we go, we're making lower lows, and then they're the ones getting squeezed out as stocks are stronger. Pound yen's just bleeding lower. Aussie yen's bouncing with equities, New Zealand yen's bouncing with equities, and the Canadian yen as well. Canadian yen might actually be a sell up here because this will be challenging the underside of the broken trend line. But again, it's the same question you have with the euro yen. It's like, do you really want to be shorting it with stocks looking like they're going to break higher? I mean, that's the S&P looks like we're going to just break out about 4,100 here. And that's pretty much it, guys. Just continued rally in equities. Let's take a look at yields really quick. Yields are dropping. We're near support. And, yields continue to drop as bonds rally back. And Lorraine said, am I the only one that thinks the volume is off, or is it the microphone? Does my sound okay? You guys, testing. How's the sound? Sound. Everybody says the sound is fine, Lorraine. So you might be on your side. Okay. Thank you, everybody. Poco asked about gold. Yeah, let's take a look. Let's take a real quick look at gold. So if the dollar is going to stay weak, we've got gold that's trying to break out here at 1760. I'm waiting to see if we trigger that double bottom. Everybody's looking at it. So there's, obviously the risk is for at least a push up towards like 1780. Because if you think about it, let's imagine everybody's like, focused on this double bottom. You might get a push, obviously you can get a rally all the way back to, let's say the double bottom holds and it plays out. You can get a move back to 1850, but it'll be interesting to see if it'll continue to rally. It's because it's going to rally with risk, and risk is obviously moving higher. The dollar is moving lower. So, this seems like a logical play at this point. Okay. All right. Well, guys, I wish that we had some more volatility. I don't want to sound too much like a broken record, but it's really, really difficult to have volatility when equities are at all-time highs. Currency volatility is low, makes it very difficult, makes it hard to nail down some good trades. And unfortunately, the Fed chairman didn't give us anything to really claw onto today. But let's see how the equity markets respond just above 4,100, because 4,100 and 4116 is the 161% extension of this last move lower. So we might get a reaction from there. But good luck, everybody. Thanks, and have a good day. I'll see you guys in the chat room. Thanks.